Are you struggling to make sense of your finances in a world of high inflation and market volatility? Well then, here at Wealth Wizards, we're here to enlighten you because in times like these, it's crucial to make informed decisions with your money. Many of you might be wondering, should you sell off your investments and hoard cash in uncertain times? Well, we're here to tell you that this might not be the wisest move. Holding on to cash can actually cost you money as inflation erodes its value by the day. So, what's the smarter approach? Instead of trying to time the market, we recommend staying invested. Don't just take our word for it. Some of the world's most successful investment firms swear by this strategy. It's about having a long-term plan that matches your risk tolerance, goals, and timeline. And remember, the key is to keep exploring your options. Now, let's talk about where to put your money during economic downturns. Join us as we dive into the 6 assets that could help you secure your financial future. But before we get started, don't forget to like and subscribe to our channel for more invaluable financial insights. But other than that, let's begin. Number 1. Consumer staple stocks. Investments in companies that provide necessities like food, drink, and household goods are known as consumer staple stocks and are sometimes referred to as the bedrock of the investment world. If you're looking for stocks that can weather economic storms, it's important to understand what makes these companies so appealing. In the first place, consumer staples form the backbone of the market because of their enduring popularity. People continue to stock up on these necessities even in the depths of economic depression. This consistent demand provides a safety net for your investments, which is invaluable during market downturns. The stocks in this industry are enticing since the companies have established track records of success. Many of them have been trusted by consumers for many decades and are well known in their communities. Their sustained prosperity isn't a fluke. It's evidence in their superiority in their chosen fields. In many cases, they have the lion's share with little competition from rivals. This preeminence aids in keeping prices stable, which acts as a buffer against the price swings that can have ripple effects in other industries during economic downturns. In times of economic uncertainty, these anchor stocks will keep your portfolio from sinking. You may look into megacorps like Coke, L'Oreal, and Walmart. These storied labels have not only thrived through the ups and downs of the economy, but they have also maintained a steady track record of dependable, sturdy operation. To that end, these reliable options should be seriously considered as a means of portfolio insurance. Number 2. Precious metals. Gold and silver have always been seen as safe havens during economic downturns. Even when the economy is in flux, these precious metals usually hold or even increase in value. They are resilient in part because they are not tied to the economic health of any one currency or nation. When economic conditions deteriorate, investors can protect their wealth by taking advantage of this separation. In addition, the difficulty and expense of mining for precious metals raises their market worth. The supply of precious metals is limited, in contrast to the infinite supply of fiat currency. More people buying and holding these metals could improve their scarcity and therefore long-term worth. Precious metals investments come in a wide variety of shapes and sizes. Physical metals, such as bars and coins, can be purchased, but there are other fees to think about, such as storage and insurance. However, you may diversify your portfolio with precious metals without having to physically store them by investing in exchange-traded funds, ETFs. Alternatively, you might purchase shares in a company that explores for and refines precious metals and invest directly in the company. Finally, mutual funds allow investors to pool their money with other people so that they can buy shares in a wide variety of precious metals equities and exchange-traded funds. Number 3. Healthcare sector stocks. Healthcare is one industry that consistently shows its resilience despite the ebb and flow of the global economy. Today, we'll delve deep into healthcare stocks, an industry where demand for basic services is consistent across economic cycles. When you think about it, the necessity for healthcare, preventive medicine, and emergency medical services is something that will never go away. People's need for medical treatment and the purchase of necessities like prescription drugs will persist regardless of the health of the economy. This innate need provides a solid basis for healthcare industry investments. The recent worldwide epidemic of COVID-19 has only served to highlight the importance of healthcare innovation even further. As a result, many healthcare organizations are enjoying rapid expansion for the first time in their history. Stocks of many pharmaceutical companies including Moderna, Pfizer, Johnson & Johnson, and AstraZeneca have recently risen dramatically in price. Although these examples of achievement are motivating, it is critical to avoid being misled merely by the current buzz. As we make our way through the world of finance, we must never forget the lessons taught by the fall of Theranos. One must put on the hat of a diligent investor to make headway in the healthcare industry. In order to make wise financial investments, thorough research is essential, and tangible evidence of a company's achievements should act as your compass. Number 4. Government bonds. Let's talk about a safe and secure investment vehicle, government bonds. Because of the low level of risk associated with them, many investors choose them. During economic downturns, why do government bonds seem like a good investment? You can count on their stability because they are backed by the government. Bond's stable rate of return makes them a good alternative to the more volatile returns of the stock market. Such reliability is especially valuable in these unstable times. Government bonds provide a stable source of income in the form of interest payments and are also a relatively safe location to store wealth. Government bonds are also quite liquid, meaning they can be bought and sold quickly and easily. There are, however, a few things to bear in mind. Government bonds offer a stable source of income but typically have lower yields than other investment options. In the current economic context, it's possible that government bond interest rates will fall short of keeping pace with inflation. The value of these bonds can also alter as a result of shifts in interest rates. The market value of outstanding bonds could fall if interest rates were to increase. Therefore, a balance must be found between the security they provide and the constraints they may impose. Number 5. Crypto. Let's take the plunge into cryptocurrencies, a high-risk, high-reward investment that should be part of any savvy investor's portfolio. Just what makes cryptocurrency so special? They are also less vulnerable to economic volatility because no single government or central authority has control over them, much like precious metals. Furthermore, there is a finite amount of cryptocurrency in circulation, and it is well known that scarcity increases the value of a commodity. But it's important to be cautious when putting money into cryptocurrency. It would be unwise to put all of one's financial resources on this because of its inherent volatility. Think instead about branching out. Furthermore, it is crucial to select the appropriate cryptocurrency. The volatility of the Bitcoin market and the possibility of economic downturns in 2023 make strategic planning a necessity. When the market is down, the top cryptocurrencies to invest in are Bitcoin and Ethereum. There is less risk of a financial collapse for these tried and true coins. We have seen the incredible heights to which cryptocurrencies are capable, and now may be an excellent opportunity to buy at a discount. Substantial returns can be expected from these investments in the future as a new economic cycle begins. Number 6. Investing in yourself. Finally, let's talk about an investment that's frequently forgotten: making an investment in yourself. This is a tried and true method that can provide permanent advantages. Your acquired skills and expertise are resources that will always be valuable regardless of economic climate. In order to succeed in an economy, it's important to invest in learning opportunities like classes, mentorship, and networking. In addition to saving you money in the long run, this investment will also provide you with exciting new opportunities. You can cut your losses and increase your gains by investing in yourself over time. It's a clever and long-lasting strategy that yields benefits beyond monetary ones. Your greatest investment is in yourself, so always keep that in mind. Now that we've tackled all that, here's a question for you. Which of these investment options resonates with you the most? And how are you planning to diversify your portfolio? We'd love to hear your thoughts in the comments below. And before we part ways, a friendly reminder to hit that like button if you found this information helpful, and don't forget to subscribe to our channel. By doing so, you'll stay up to date with our future financial explorations and strategies. Thanks again for joining us here at Wealth Wizards, and we'll see you in our next videos.